Pompliano founded Digiforce. It's a social media platform that contains information about demography, and they were acquired by Strategic Link Partners in 2013. In 2015, he served as a growth leader at Snapchat. He was also a product manager at Facebook. He's seen inside these digital giants. He became a managing partner at Full Tilt Capital in 2016, and they were an early stage venture capital firm that was acquired by Morgan Creek Digital Assets in 2018. He's one of the people that, the media goes to again and again to hear his opinion because he's got some really unique insights into the blockchain world. His podcast is called Off the Chain Podcast, and we're pleased to welcome Mr. Anthony Pompliano. What's up, Tony?
How are you guys?
Does anybody call you Tony, or does everybody call you Pomp?
People call me a lot of things. They're good to call me whatever they want.
Sometimes not always glowing, I'm sure.
Yeah, there's plenty of those people as well. No problem.
Yeah, well, when you have opinions, you're not going to please everybody, and you've got a lot of them. So let's start here and now. What in the world is going on?
Going on with what? The economy, Bitcoin? What do you want to talk about?
Man, I'll break it all down. Let's talk about the economy. Let's talk about Bitcoin. Let's talk about coronavirus. I just want to hear your thoughts. Brain dump, dude.
Yeah, well, look, it all starts with, I think, coronavirus. Obviously, there's a very serious, health situation that needs to be taken seriously. The problem is that all the data is inaccurate. We've been saying this now for literally weeks. Both the infection numbers, the death rates, when you look across geographies, the data is just unreliable and inaccurate. And so it's really hard to make good decisions when you're looking at bad data. People are trying their best to do and make those decisions with what they have. But it's just very obvious that the data is bad. If you look in somewhere like a New York City, at one point when they were saying there was 12,000 deaths, they were openly stating that 5,000 of them had been confirmed cases and actually tested positive. But 7,000 people, they just threw in there because it was probable that they had died from it. And so, I'm not here to say it could have been more, could have been less, frankly, right? It could be worse than we think it is or better than we think it is. But just the idea that there's bad data, I think is a really important point, because then it leads to every other decision you make, not only one, how you deal with kind of the government mandated shutdown, but also then how do you reopen cities, right? How do you measure success? How do you make sure that you're not actually doing damage by reopening cities? How long should people be mandated to wear masks and social distancing and things like that? Generally, I just think that I'm not a health expert, and I really couldn't tell you if this virus is better or worse or whatever than anything else. It's just obvious that the data is wrong, and we got to get testing and get better data. That then leads to a economic crisis, right? I mean, anytime you get an economy where literally you sent everyone home, I think that it's obvious you're going to have an economic downfall. You've literally ground the economy to a halt. And so 4.8% GDP negative in Q1. That's actually not that bad given the fact they sent everyone home for a couple of weeks. You've got over 30 million Americans who have filed for unemployment claims, first-time unemployment claims in the last 6 weeks. And then you got companies that are literally reporting, just massive losses. I mean, American Airlines today came out with their numbers about $2.2 billion in Q1, which, sounds pretty bad until you realize that most of those losses all came kind of in the last 4 weeks of the quarter, last 3 weeks of the quarter. And so right now they're losing about $70 million a day, right? Which is just massive numbers. And so airline bookings are down 95%. The stat that just blows my mind is movie theaters. So the third week of March in 2019, U.S. domestic box office did over $200 million in revenue across the board, across the industry. In the third week of March of 2020, they did $5,000 combined as an industry.
We're all Netflix and chilling, right? That's it.
I mean, and look, and here's the sad part, right? Is like what that means is that drives the unemployment number. That means that all of the small mom and pop shops, they're going to get put out of business. And then the large companies are going to go, basically become socialist and go to the government and ask for bailouts. And that's pretty much what we've seen happen. It's gotten so bad that even governments are saying, wait a second, local and state governments are going to the federal government and saying, hey, we need a bailout, right? We literally mismanaged our capital, our revenue is down. And so I think what you're starting to see is, the virus has essentially exposed a lot of shams in society. And what I mean by that is higher education got exposed, a lot of kind of the government financing and capital management, balance sheet management, they got exposed. A lot of these businesses that were upside down in terms of their unit economics, or didn't have strong balance sheets. They got exposed. And then bad businesses, right? I mean, look, the conversation a lot of people don't like to have, but I do think is important is there's a lot of small businesses out there that are just bad businesses in general. They're very hard to run. And that doesn't mean that those entrepreneurs or small business owners should be left out to dry. Actually, I think we should be spending the most time helping them. America was built on entrepreneurs and kind of the American spirit of innovation and ingenuity, but it doesn't change the fact that if you're, let's say, a restaurant, you've got super thin margins, you basically run year round with about 2 weeks of cash in the bank. That's just not a great business, right? And so naturally, you're going to start to see some consolidation there. And my fear is that a lot of those businesses don't come back, which means that those 30 million Americans who filed for unemployment don't have jobs to go back to, right? And so the two things I'm paying attention to right now are how many small businesses are actually going to come back after this shutdown. My guess is about 20% of them probably will not come back. Small businesses make up 50% of jobs in America. So, it's about 10% loss in jobs on average. And so if you look at that with that unemployment number, you're not going to get back to single digits for a while. And then the second thing is kind of what is the economic damage of the large companies, right? How many of those companies that are showing losses can get back to break even in Q3? Right? How big are the losses in Q2 for this year? And kind of what's that road to recovery look like? I think people are, a little bit more optimistic than they should be. And you see it in the stock market, right? You kind of see this dislocation between stocks rallying and the economic reality, or what I call the economic carnage, right? I was talking to an accountant I work with, and I just said to him, "Hey, are you good?" Right? Not necessarily from a business standpoint, but just like mentally and psychologically. And he said, "I've never seen this amount of economic carnage in such a short period of time." And I think that just
it has been unbelievable. And I think, and I want to ask you about this. And for one, it's great to meet you. We've not had a chance to meet before, so great to finally have a chance to chat with you.
Nice to meet you as well.
Yeah, we're talking about this economic carnage. At what point do we get to the point where civilization starts to teeter? Because it seems to me that we've had the world tap on the economic brakes and then slam on the economic brakes, and then now we have this sort of, it's almost like we've seen the bomb go off, and now we're just waiting for the shock wave. Like we haven't even got, the shock wave isn't even here yet, because more and more people are going to start suffering. What happens when we're already here? We're at the first of the month again. People got to pay rent. They got to pay their phone bill. They got to pay electricity. We got 1,200 Trump bucks. But what is that going to do when massive people's, when there becomes more have-nots than those that have? It seems to me that social unrest is closer now than it maybe has ever been, at least in our lifetimes.
Yeah, I mean, look, you got to remember a couple of things here, right? So one is the government works for the people, right? We elect them; they're here to serve us. They're not, kind of in charge of us, if you will. But we put them in place, and so there's ways to kind of rectify that situation. One of the easy ones is when it's time to vote, go out to the polls and vote, right? If you don't like what the job somebody's doing, go vote them out of office. And I think that's kind of the beauty of a democratic process. In the meantime, there are incredible infringements on civil liberties and personal freedoms going on. I continue to tweet about them because I have the unique perspective of, not only one, having been in the U.S. Military and gone overseas, but I've seen what happens in these economies. I've been to these places. I've literally seen the end of this road. And if you talk to a lot of people, especially people who've been in the military, who have kind of seen this, they're the first ones to say, look, I love my country, but the whole point of the country is to have those civil liberties and personal freedoms, right? That is the American spirit. That is the American dream, if you will. And so the things that I look at, are kind of different than most people. So the first thing is we've got horrible leadership across the board on both sides of the aisle. And what I mean by that is imagine being a governor right now and saying, if you're a business owner in my state, I'm going to shut you down. Literally, I'm going to mandate that you have to shut down, but I'm going to keep pulling my paycheck. The first thing every governor should have done is said, I'm going to forego my salary until my small business owners can get back and start making a living. I'm not going to take my living, right? I'm actually going to donate it to them. And so it's little things like that I look at and say, these people don't care. They really don't care, right? And they'll kind of wave their hands and say they care and do all this kind of stuff, but it's all opportunistic. Because the second piece of that is, if you look at like the PPP loans and things like that, all of the help is going to the people who are rich, the people who are hyper successful, or the people who are well connected. If you really, really want to help people, put money in the hands of the people and in the small businesses. That's what will get the economy going again. Not giving 200 plus public companies PPP loans, or having the banks literally pick and choose who they're going to process loans for, even though they're publicly saying it's first come, first served. Instead, they're just picking their best clients.
Yeah, that's a great point there. So why aren't these corporations held responsible? Like they tell the public, hey, well, you need to save for a rainy day, but they don't hold the corporations to that same standard. They spend their billions and they go, oh, I'm just going to do stock buybacks and help fuel the investors, but not actually save for a rainy day. A lot of these companies could have avoided all this if they had saved some billions in the bank, right?
Well, here's what you remember. All the people in the government that are making the decisions right now, they're all Wall Street bankers. That's literally that's what they are. They're bailing their friends out, right? Mm-hmm. And it's this whole idea of quantitative easing being kind of the UBI for rich people, right? And my favorite, way to kind of position this, or the perspective I look at it from, is that the reason why these corporations are running to the government and asking for bailouts is because they know the government's the idiot in the room. The deals that they're getting from the government would never happen from private market investors or public market investors in the debt and equity markets. And so if you look at the airline bailouts, for example, they got given billions of dollars and they only have to pay back 30% of it. 70% of it's a grant.
Which we're paying for, right? That's on the taxpayer back.
What investor do you know who's just going to give somebody money and say, I just feel bad for you, just keep it, right? That just doesn't happen. And so again, that's why they're running to the government, is because they know the government's going to be the idiot in the room. And why is the government going to bail them out? It's all under this, again, this sham of, oh, they're too big to fail. They're too important. Well, guess what? If the airlines go through bankruptcy, the airlines are not going to stop running. They're still going to keep running. They're actually going to transfer the assets from bad capital allocators to good capital allocators. And it's more likely we'll get better competition, better innovation, lower prices, more efficiency in the market. But what's now happening here is we're moving from a capitalistic society to a socialist society, and it's going to change the risk factors and the kind of the incentive structure in our economy. And that's a really bad thing, because now think about, once we get out of this, all of a sudden, why should I save? I know the government's going to bail me out. I'm going to just literally leverage up and I'm going to go for broke. And if I get to that point, well, the government will bail me out in the next financial crisis and I'll be fine. And so what you actually are going to do is you're going to kind of open the governor on risk taking, which sounds not that bad until you realize there's no correcting mechanism on the other side of this. And so you're basically removing risk for these large corporations. And then out of the entire thing, the biggest sham of it all is this horrible governance at the corporate level, right? Because what these boards are doing is they're tying a lot of the executive compensation to stock price, and they know that they can use debt-fueled buybacks to drive that stock price up. Well, when you tie compensation to stock price and the compensation is in actual stock options or stock grants, what you're doing is you're incentivizing bad behavior like we've seen. And so I've got no problem with stock buybacks. Knock yourself out. It's a tax efficient way to return value back to shareholders. You want to do dividends, knock yourself out. But if you do that stuff, then don't go crawling to the government and asking them to bail you out. Go back to the people that you gave the money to. Go back to the equity and debt holders and say, hey, we need to raise capital. And you're starting to see some companies start to do that, but it's just not happening fast enough. And so, I kind of wrap all of this up on the economic side and say, look, we're paying for the sins that people committed over the last decade in this bull market. And the thing that I continue to just beat over and over and over again to people is there's two key points. I don't know a single person who has multiple income streams that spends less than they make that is struggling right now. And isn't very helpful now in the moment, right? But it's a lesson learned for a lot of people that a strong balance sheet matters. So if you have multiple streams of income and you spend less than you make, you're likely to be able to weather situations like this. And so That's a lesson learned that people should take forward.
Well, we've always said that there's, so many Americans are just one paycheck away from not being able to pay their rent. And it's a crazy way to live. So when this all shakes out, currencies are going to fail. Certainly the dollar as we know it is going to go away in some time in the reasonably near future. Is it going to be the Chinese digital yuan that becomes the world currency? Is it going to be Bitcoin? Is it going to be the Fed coin? What do you think?
Yeah, so I actually think the exact opposite. I don't think the dollar is going anywhere. I think the dollar is going to continue to strengthen for a while. And what you'll see is a lot of kind of the ancillary currencies or the developing market currencies. They're all going to start to fail. So if you look at the Lebanese pound right now, it's getting absolutely hammered. It's down like 50%, and then it gets compounded. Not only is the currency falling, but then on top of that, there's starting to be some food shortages. So you're getting the currency falling, which immediately means that prices rise for food, for example. Then it gets exacerbated by it being a shortage of food, so food prices go even higher. On top of that, you then see capital controls where they're literally saying you can only withdraw so much money out of an ATM, and they're continuing to kind of minimize that number. And then you have to actually withdraw in the Lebanese pound, so you can't withdraw in other currencies. And then on top of that, people are waking up. So they realize they're sitting there and saying, wait a second, when I went to sleep last night and I woke up this morning, my net worth, the savings I have is now worth 10% less. You stole my wealth by devaluing this currency. So they get pissed off. And so you see them going into the street. They're literally going and they're attacking banks. They're protesting. They're even going after the central bank. And I think that that's kind of the canary in the coal mine of, I don't think that's going to happen everywhere. But what I do think is that we're going to see that happen more and more. And the reason we're going to see that happen more and more is because the dollar is going to continue to strengthen. And these other currencies are going to get hammered. And people are going to realize, either I have to get out of my currency, I've got to get into dollars, or they're going to look for something else that maybe is non-sovereign, like a Bitcoin. And so I think those are going to be the two kind of winners coming out of this.
How does the dollar strengthen when they just print shitloads of it? Like, it seems to me that, and then this whole oil crisis where we had negative, valuations of oil last week. How does the dollar get strong? Because I've heard other people say this, and I understand some of the theory, but I think a lot of people are going to hear this and go, wow, so they're going to throw $7 trillion printed out of thin air, and all of a sudden the dollars are going to get stronger. How does that happen? Because we've seen what's happened in, the Zimbabwe $100 trillion bill. Like, well, how is that going to work? What's the economics behind that?
Yeah, so there's two key components to this. So the first is the reason why the dollar is strengthening and kind of in the short term is because we're in a deflationary environment, right? So dollars are very valuable. They're scarce. People want them. So they sell all their other assets and they run for dollars. And that's kind of the liquidity crisis or liquidity trap that really we saw kind of towards the end of March and into the beginning of April. And so when that dollar strengthens, obviously what they're going to then try to do is print a bunch of money to systematically weaken the dollar, right? And you want to kind of weaken that dollar to stabilize markets and then provide relief into those markets or asset prices. The problem is that this deflationary environment is so deflationary, it's just going to eat up all that liquidity, right? And so they would literally have to print probably $10+ trillion to really have an impact. I don't think they're going to jump right to that. We probably eventually get to that, but it's going to take some time. And so in that time it takes to print that much money, you'll continue to see the dollar rise. The second contributing factor is it's all relative, right? So if you sit there and let's say I'm in the Australian dollar, for example, well, the Australian dollar actually went down 50% against the US dollar earlier this year. Now, what does that mean? That means that the US dollar is strengthening and my currency is getting weaker. So it's on a relative basis. And so when you look around the world, the US is printing, call it $2 to $3 trillion so far, but Japan alone printed about $1 trillion. They announced a $1 trillion monetary stimulus plan. And so the rest of the world is also printing a bunch of money as well. We're likely to print the most, but on a relative basis, everyone else is printing as well. So it's not having the full impact as if just the US was printing and nobody else was. And so what you start to get is the developed countries will probably be okay for a while. The non-developed countries or the developing countries, they're the ones who are going to suffer. Their currencies will go. And those people basically are going to have faced with a decision. Do I go into a current, global superpower currency, whether it's the RMB, the dollar, or do I look for something like a Bitcoin that's non-sovereign and all I need is a internet connection in order to get access to it? And I think that's really where you're going to start to see a lot of adoption is in those other countries and geographies where their currencies are failing and people rush out. Lebanon's again a great example. Bitcoin right now is trading at like a 100% premium, right, in Lebanon because it's so sought after because their currency is failing. And so I think you'll see that in other countries over the next kind of 12 to 18 months as well.
Well, how about for the Western world then? The Bitcoin halving is coming up here in 11, 12 days. And it's we saw 9,400, I think. We're back down around 86. What impact do you think the halving is going to have in this current environment?
Yeah. So, I mean, look, the halving by itself is just a supply and demand, kind of exercise, right? Anytime that you take an asset and you cut supply or have a supply shock and demand stays the same or goes up, you should have a increase in price, right? So that's kind of a economics 101. You can literally go on YouTube and figure that one out. What I think is more interesting about the halving, though, is the macro backdrop that it's occurring on. So last June, I started writing a bunch about this idea that there were these economic alarms going off, right? And I basically said, look, I don't know where kind of the top of the market is, but you can just see these little things that are starting to show up that is saying we're near the top. And I think it was in July, I actually wrote something where I said, now feels like a good time to go to what I called a real risk mitigated portfolio, which was basically go 5% Bitcoin, 95% cash, right? And things like that. And so what we ended up seeing, or what I was talking about then, was we were going to get a very large interest rate cut. I didn't think we'd get to zero, but I thought we'd go pretty low. And then we'd see money printing, right? Quantitative easing. And that's really the two central bank tools that they have. I didn't think we'd print this much this fast for sure. And so what did we get this year? Rates to zero and $3 trillion or so printed. And that's all going to happen simultaneous to the Bitcoin halving. And so last summer, what I was essentially saying was the fact that those things are all going to happen around the same time. If you go back to 2008, 2009, when they cut interest rates and printed money, everyone ran for inflation hedge assets. So they ran to gold, right? Gold had gone down in 2008 about 30% over the summer of 08. It then went ahead and rallied almost 200%, ended the 08-09 crisis in 2011 at an all-time high. And so I think that's what's going to happen here, right? You're already seeing gold and Bitcoin, they're up, right? And they're trading up and they continue to trend upwards. People get scared of inflation. They run for inflation hedge assets. The difference is that Bitcoin's literally having the halving occur right now, which means that it would be the equivalent of 50% of gold miners shutting off production right when everyone wanted gold. Of course, that's going to drive price higher. And so in my opinion, this is just rocket fuel for Bitcoin. And I think we'll see a $100,000 price point by the end of 2021.
Yeah. Well, and we were talking about that with Charlie Shrem, and how much of that is Bitcoin value going to 100,000 versus the dollar. They're printing so much of it that, the Bitcoin sort of keeping its sort of level where it is, keeping its value, because we're going to start seeing more and more dollars in circulation, which means it's going to cost me more to go buy bread. It's going to cost me more to buy meat. They're shutting down meat plants, so meat's going to become scarce. It's like maybe it's going to be all-time highs for commodities, right? And for things for us to buy, things that we need to eat. And so, I was going to ask you about that, about, gold and Bitcoin. It seems to me that gold should be way, way higher than it is because they're printing all this money and they have all that paper gold and all that paper silver that doesn't even exist. And it's the manipulation of these markets has just been so profound to me. So maybe give us that. So you think, Bitcoin could be 100,000 by the end of 2021. What do you think gold and silver could be?
Yeah, so I'm a pretty big fan of both Bitcoin and gold from a kind of structural standpoint. I own no gold, only own Bitcoin. But on the gold side, it's a stable store of value for the most part. So when we saw the market draw down back in March, Bitcoin drew down 50%, gold drew down about 12%, right? So it kind of did its job. Relative to other assets, it drew down the least. Well, that lack of volatility works against it on the upswing. Right. So with Bitcoin, when you go down 50%, that also means that when you go up, it goes up a lot. Right. And so with gold, it's going to go up. I think that it'll end up kind of $2,000 to $2,500, somewhere in that range over the next kind of, call it, 18 to 24 months. But I just don't think that you're going to see kind of 3 to 5x in the gold price.
But it doesn't seem to match like the amount of money that gets printed in circulation, and then the amount of fake gold paper money that there is, that it's never seen. Because if that was the case, like gold would be $10,000-$20,000 an ounce or something even higher than that.
What you got to remember is all of that liquidity is getting eaten up by the deflationary environment. So they've literally printed, $2 to $3 trillion. And look, I got the benefit of, with the podcast and stuff, I get to talk to the smartest financial minds in the world. And the one thing that they've really kind of changed my mind on over the last 6 months or so is this idea that even if we print trillions of dollars, it's such a deflationary environment that the deflationary environment is going to eat up that liquidity. And also it's going to eat up the liquidity from around the world as well. So all that printing that Japan does in other countries, that's going to all flow to the US because everyone wants dollars. And so what you end up getting is this strong dollar. Now, where I think that I've got a somewhat unique perspective, there's a couple other guys who I know who have a similar perspective, is that you can actually get a strong dollar and get a material increase in price in Bitcoin and in gold, right? Now, relative basis, Bitcoin will appreciate much more on a percentage basis than gold will, but you can still get kind of strong inflation hedge asset growth and also a strong dollar. And it's really just because of what's happening with all of the money printing elsewhere around the world flowing into the United States. But investors kind of psychologically, they actually fear the inflation, even though it doesn't naturally occur. They fear it, and therefore they run for those assets, right? And so go back to 08, 09, people ran to gold. It went to an all-time high, but we actually never got the high degree of inflation, right? We never saw that, even though at the time, printing hundreds of billions of dollars was a big deal. You just never saw it. And so I think similar things going to happen here, where people almost like they fear what's going to happen rather than actually see it happen. And that'll still drive asset prices up, but you'll still have a strong dollar as well, which is, I don't think a lot of people were talking about that 6 months ago. I know I wasn't. And so kind of something I've changed my mind on in recently.
Well, you're allowed to do that, and we appreciate your analysis. Thanks for coming on the podcast, Off the Chain podcast. You have another show too, right?
Well, we recently changed the name of the podcast from Off the Chain to the Pomp podcast. I've started to bring on a lot more non-crypto folks. And the whole idea there is just if I can solicit, more non-crypto folks, and while they're there, then ask them about Bitcoin and kind of get them interested. It helps kind of expand the market a little bit, and it also pulls in other types of listeners, right? So
why wouldn't you just call it the Pompcast?
You and everyone, that's the $1 million question, man. I thought about
rebrand that. That's what I'm going to say.
It was on the it was on the list, but we ended up not doing it, and I think I'll be answering that question for a long time.
Man, we really appreciate you, man. Thank you so much for coming on, and we look forward to chatting with you more in the future, my man.
Absolutely. All right, you guys have a great night.
Rock on. See ya, Anthony Pompliano. There he is.